How's it going, everyone? In this video, we are going over OTE, or Optimal Trade Entry. Now, it's important to have an understanding of premium and discount prior to this video. So if you haven't seen my premium discount video, I'll link that in the top right corner. The first thing we're going to do is go over the Fibonacci settings inside TradingView, along with a few examples. And then we will head back into the chart and find a few examples of how to use OTE. Before we dive into the OTE, we need to make sure that we know where we can find the Fib levels and where we can find the Fibonacci retracement tool inside TradingView. When you go on the left side on the toolbar, on the third row here, you can click here and you see in the top Fib retracement. If you want to use this bar with all your favorite tools, you can just press this star icon and then it appears right here. So when you go to your toolbar, you should mark this out. And when you do this for the first time, this is not going to look like this. So you can double click on the Fib levels or you can press this wheel. And now you can just copy the settings I have here. So no trend line, leave this off and copy this with 0, 0.5, 0.618, 0.705. And you can also match the colors. So it's really good to see when you are in the chart. Your OTE, your optimal trade entry, is between the 0.786 and the 0.618 level. So this will be your optimal trade entry. Let's dive into the chart. Currently we are at the daily time frame of Euro USD, and let's see where the swing points are, because swing points are necessary to identify where we need to place our OTE levels. So this is a bearish example. And why is bearish? Because the order flow is bearish. So Fib levels are a retracement tool. So we follow the order flow, so it's down. And it's retracement. Fib's a retracement tool. It's retracement inside the optimal trade entry levels. For example, we mark our levels from high to low. And what we want to see is price coming back to OTE level. And where the 0.705 is our midpoint. That's our best level, but inside this area here, you should hunt for lower time frame setups. So let's see what the market does. Comes back to OTE and see how it moves away. And if we anticipate this trend going lower as well, we should look at a new swing high that's formed right here. This one. And we can hunt for swing lows to be formed. So let's see. There we go. There's a swing low here. And as we saw in our first episode of this series, there are relative equal lows right here. So we know, okay, what is resting below here? Sell side liquidity. So again, mark our Fib levels to hunt for our OTE. So we want our price to trade towards these levels and short from there. Price touches and it moves lower. And as you continue this bearish example, we created a new swing high when we moved away. Now we're going to hunt the swing low. There it is. Why is this swing low? Because there's a higher low on the left and a higher low on the right of it. So let's mark that out. And let's place our OTE. And let's see what price does inside these OTE levels. There we go. It touches and it moves away again. So again, new swing high created. Let's wait for the swing low to form. It does create a swing low here. So now we're going to hunt if price is willing to come back to our OTE area. It tries, but it fails. So we're going to trail our OTE levels until there's a new swing low created. There it is. So now we're going to mark our OTE levels and price comes there and moves away. Let's try this one more time. As you can see, guys, this happens every time, every pair. It's a really powerful tool. ICT has taught it in his first lectures, so it's on his YouTube channel as well. If you want to dive in, he has a whole course about OTE. I really recommend watching this aside from this video. So here it is, swing low created. Let's mark out our Fib. And guys, if it doesn't hit the OTE levels, it doesn't matter because you will create a new swing low and a swing high. You can just try it again. So let's check here, OTE area. And then it moves. As you can see, you got a big move, but now you see something interesting. You see a market structure shift. And we're going to talk about market structure shift in a later video. But now we're going to change our bias to bullish. So we're going to look for bullish examples. From this point, we know there's a market structure shift and we're going to look for bearish scenarios. So this is our last swing low. This is our new swing high, and we are bullish right now, trying to look for bullish setups. So we're going to place our Fib from the low to the high. And it reacts from the OTE, so now, okay, we know, okay, this is good. You couldn't anticipate this because we were in a bearish order flow. So this market structure shift should have caught you off guard because you were expecting lower prices, but it doesn't matter because now we know, okay, we're bullish. From now on, we're going to only look for bullish OTE areas. So we got a swing low created right here, and we're going to hunt a new swing high. There it is. New swing high created right here. Let's mark out our OTE area. 618 to the 786 area. And watch what price does. It touches and moves away really aggressively. So now that's a new, and it created a new swing low here. Now we're going to trail our Fib until there's a new swing high created. It is right here. So now what happened? It didn't come back to our OTE area right here. So this could be a target when price is going to be bearish again. To create a swing low right here. And a swing high right there. Place your Fib levels, OTE area, and then wants to move away. Again, swing low. Swing high. OTE. No OTE, direction from the 50% level. So new swing low. New swing high. It reacts here from the OTE level and it moves away. New swing low. Let's check for a swing high. We created our swing low and we created our swing high. Comes back to OTE. Stays here. It even goes even deeper into the 088 level. Then it moves away. The main goal when using OTE is to pair it with other PD arrays. So when you mark out your OTE with your Fib levels, you have the OTE area right here. I'm going to make it green. I want to pair it with more confluences, more PD arrays to pair with our setup to go back higher. So what is right here? You see a order block. And I want to mark out 50%, the mean threshold of the order block. Because there's a level price loves to react from. So let's have that right here. Also have a fair value gap. And also there's a breaker right here. So we have lots of consequences in this area. So this is going to be a really interesting situation. What you can see often is when you have lots of consequences, price can stay in this area for a while just to get more orders in, because retail thinks when you see this movement, they think, oh yes, we're going bearish. And even when price stays here for a while, okay, they're creating more liquidity from sellers, and then they would love to just continue the trend because the order flow is bullish. Following a price, it touches the breaker and the order block. It hasn't touched the mean threshold yet. But it does right here. And the bodies aren't respecting the mean threshold, so this is really tricky. What you obviously want to see is that the mean threshold holds, so the candles will not close below this mean threshold. But it didn't, but lots of consequences, we know price could go back up again. So it traded really deep inside the 0.88 levels, and then it moved away. And we can do a fib right here as well. New swing low created below here. It's the OTE area. You see the bodies respecting it and moving away. And now go even higher. No OTE, so we're just going to trail this. Here it touches the OTE area. Right there. You see a reaction of like 100 pips to the upside, but then you see like there's downward momentum. So we know, okay, order flow is going to be bearish again because we broke structure. Now we're going to do the bearish examples again. At the time of this recording, we cannot continue. It's now the 1st of October, but we're going to hunt OTE levels right here. I would love to see a retracement back to this fair value gap inside the OTE area. It will be an amazing level to short from, because we are taking buy side liquidity right here, and then again move even lower. The last part about OTE, what I want to discuss, is inside these big ranges, inside the OTE ranges, we want to see price retrace back to the OTE area from down here to back up here. But inside this range, there are more OTE ranges to be found. So we're going to look for swing highs and swing lows. For example, you have a swing high up here and a swing low here. And if you mark your fib levels, you can find another OTE level right here. So at the smaller time frames, you can easily hunt a setup for this short. So you don't need to wait like 2 or 3 weeks before your trading setup to before. So if you go down to the 15-minute time frame, price comes back into our OTE area, massive displacement, leaving a fair value gap, and you can do the stop loss here, and the target below your last swing low was right here, clean to R. You can even find a bullish example here, and when you're trading against the order flow, always make sure your risk and your lot size are lower, preferably 50% of your original size. You see here, swing low, swing high. You got some movement up. So when you mark out your fib, from the high to the low, goes back here, and then it moves back to our OTE zone, and then again upwards here. This is a clean 42 pips trade right here. Could be worth your while, especially because there's a daily fair value gap right there. Price always wants to trade back to it again, and then before it moves away. I want to show you another example on how to use OTE to frame your smaller time frame setups. We have our swing low and our swing high right here. It didn't touch the OTE level, but what it did It filled the daily fair value gap and moved away. Let's watch how price reacts from this level. It doesn't come back, it creates a new high. But because this is already filled in the fair value gap, I'm going to notice a new swing low. And then we're going to hunt for a new swing low to do an OTE entry. Right there. And this on the daily. Well, you must always have your daily levels marked up. So we have our fair value gap right here. A wick does the damage, but the bodies tell the story. So the bodies didn't come here yet. And they do right here. So we have our swing high on top. We're looking for our OTE levels. So at this place, we're going back to the 50-minute chart to check how price reacts from this level. This on the lower time frame, we're inside our OTE. And we see movement. When it hits, it moves really quickly. So what it does, when you want your 2022 ICT mentorship setup, it took a sell-side liquidity right here. It moved away aggressively. Where do you see displacement? You don't see it right here, but you see it in this candle. It left a fair value gap. So at this stage, my stop loss will be below the last low. And my target will be at the next swing high or next fair value gap. This is a really nice low-hanging fruit because we can take some failure swings right here as buy-side liquidity. And we have a clean 3-hour trade. But there's a catch at this trade. We're going to talk about kill zones later, but this is outside my trading kill zone. It's currently 8 o'clock New York time in the evening, and that's outside our kill zone because it's the Asian session. So we need to wait for the setup to appear somewhere in the New York session. And as you can see right here, what happened in the New York session, it takes out the sell side liquidity from the Asian session before moving up. This is going to be news. Yes, it's 8:30. So what it does, you still have the same bias. So what you wait for is a liquidity rate, exactly 2022 mentorship, liquidity rate, big displacement up, leaving a fair value gap. And then you can take the trade as well. This is a big stop loss, but again, you know you have your target. This was our short-term target, but with this risk to reward is not so good. This is 0.6 risk to reward. So we're going to do, okay, with this massive stop loss, we can go to lower time frames as well to get a better entry. But to stay at the 50-minute, to where can our targets be? And low-hanging fruit would be this equal highs. And we have a fair value gap on top of that. So that would be our low-hanging fruit. So we're going to take the trade right here. This can be scary when price doesn't met our objective yet. Then it comes back. But when it does and you see this forming, this relative equal highs, you know from our earlier episode about buy-side liquidity, this is like a target for the price to go to. I hope you guys enjoyed this video. And if you did, please hit the like and subscribe button. And I'll see you in the next one.